All right, this is James Pelton. I'm here with another live for you today, and I'm excited about this one. This is going to be kind of half talking about a project, but half also just education. And we're going to have Charles on. We're waiting for him. He should be here very soon. He's the co-founder and head of growth at Phuture, at Phuture Finance, and we're going to talk through kind of index funds and how like a crypto index fund might fit into your portfolio and things like that. We're going to talk about the market a little bit. He's got a lot of insight into these things. So I don't want this one to just be talking about a project, but also bring in some education. You know, that's when we're in the bear market, especially. One of the best things to do is just learn what you can so that you're ready once the bull market comes back. So, as is our custom, please hit the like button as we're getting started here. You know, the YouTube algorithm needs that to kind of get going. And then if you have questions about index funds or the market or anything like that, feel free to bring those up and those discussion topics. We kind of have the things we want to talk about already, but if you guys have something else, you're the audience. So we're here to serve you. So if there's other things that you want to talk about, feel free. We got some of our regular people on here already. Funny Turo, Crypto Crazy, Ed, Mohammed, welcome everybody. We're going to do the comment for the day. This used to be my comment every day, but I've gotten away from it with more creative questions. But actually, I'm going to go back to it because I haven't asked it for a while. But where in the world are you watching from? So again, I'm in Lincoln, Nebraska, but again, I'm amazed at just seeing connections with people all over the world through crypto and through technology. So I love it. All right, so let me bring up my guests here. We got Carol and Charles. Let's start with Carol. Carol, do you want to introduce yourself? And then Charles, do you want to introduce yourself also?
Yeah, absolutely. Thank you, James. Thanks for having us today. I'm Carol. I lead marketing here at Phuture. I'm happy to be here in the channel with you, James, and with Charles as well. Excited for the chat we're going to have today. Some really cool insights are about to come out.
Amazing. Yeah, great to be here, James. Thanks so much for having us. Big fan of your channel. Really looking forward to talking about passive investing. My name's Charles Story. I've been in this space since 2016. Previously a partner at a London-based venture capital fund. I left that to start working on Phuture. We've raised around $3.8 billion in funding to build out our vision for the future. My role is co-founder and growth lead, which really encompasses many aspects of the business, what I'm looking forward to kind of talking about today.
Yeah, absolutely. And so I want to make this very educational because I think you have a lot of unique insights into the market and into what's going on in the market. But can you start by just talking about Phuture and kind of talking about what it does so people aren't just curious the entire time we're talking?
Of course. So what we do at Phuture is essentially allows users to create and invest in a basket of crypto assets, or as we call them, indexes. So our job, our mission, our purpose, everything that we do every day is centered around making exposure to crypto, its sectors and ecosystem as easy as possible with passive index products. That is what we do.
Okay, very good. Yeah, that's awesome. I'm used to founders when they start talking. I'm used to kind of, okay, 5 minutes later. So that was great. That was nice and succinct. But you offer these index funds basically where you kind of just bundle up. You're only on Ethereum right now. Is that correct?
That is correct for now. Early September, we will be also live with an Avalanche ecosystem index, which is causing a lot of hype at the minute. But for now, we're on Ethereum. That's right.
Okay, so basically you just kind of bundle up the biggest assets on Ethereum and kind of what you guys have thought, oh, these will do well, bundled them all together and created an index fund. Is that kind of summing it up?
So what we've done, and Ethereum is really the only place you can do this at the minute, James, is what we've seen in Ethereum since its inception in 2015 is sector formation taking place. So in the last kind of 2 years, you've seen DeFi emerge as one of those sectors. You've seen insurance emerge as a sector. You've seen NFTs, really a world of their own, but one of the sectors within Ethereum. We haven't yet seen that in other ecosystems. And that's why when you look at Avalanche, what we're doing there, it's more of an ecosystem index. What we've done on Ethereum thus far is create a sector index, which is focused on DeFi. and that index is called PDI. And that is essentially looking at the top market cap assets on Ethereum, within DeFi, and then providing investors exposure to this sector with one ERC20 token PDI. So that's what we're kind of doing on that one, making it easy for people.
Yeah, I think that's super cool. I think that's just awesome. Are NFTs part of what you're doing too? Or I just noticed your cyberpunk in the background, so it made me just think about that.
Yeah, they will be for sure. We got to start somewhere, and we felt, DeFi, passive investing, Web3 indexes, kind of it felt right. It felt like a good place to start. But yes, in NFTs and other interesting sectors will be at the forefront of our product range. We want to provide simple exposure for investors who are looking for exposure in all these different sectors. It's our role to make sure that we provide the simple on-ramps for them to do so.
Okay, very cool. And that's something, one of my passions with my YouTube channel is I want to help get normal people into crypto. If you're in crypto, I hate to tell you, but you are not a normal person. Okay. I think I was looking, global crypto adoption is at like 5% right now. Okay. So you're weird. That's good. Weird in a good way. So I love that I think we're co-aligned with that. Maybe on the education side of things, sometimes we take for granted what it is that people know and understand. Do you want to start by just explaining what is an index fund and how that works in crypto?
Yeah, for sure. I'll take a stab at it, and anything I miss, maybe Kara can fill in. So, what an index fund essentially is a basket of assets. And what the index fund will do is it will take out assets from that basket and replace them with new ones, following what is called a methodology, which is essentially the rules. So in traditional markets, you have the large indexes, the S&P 500, and here in the UK, the FTSE 100, and these follow a market cap weighted strategy. So they'll be looking at the market capitalization of those assets. And if whatever asset that's trading at that time doesn't fit that criteria, it will be removed from the index. And whatever asset does fit that criteria will be introduced to the index. So thus owning the index, you essentially own the market. And as John C. Bogle says, he says, don't buy the needle in the haystack, just buy the haystack. And what we've also seen is fund managers, active fund managers, so these are the biggest hedge funds in the world, cannot perform the S&P 500 over a 20-year period. I think there's a 98% fail rate. So index funds really have proven themselves and are in a world of their own when it comes to performance.
Okay. Yeah, no, I think that's totally true. So how do you see, so crypto has mainly been day trading, right? Where you're buying and then you watch the chart and then you hope you sell at the right time. And that's mainly been what crypto, why has it taken so long for kind of index funds to work their way over? Like, why aren't we seeing more people do kind of similar to what you're doing?
It's a good question. Kara, do you want to take a stab at that one?
Yeah, absolutely. I think that right now, the sector, as you were saying, James, we're still in the beginning. If you're in crypto now, you're weird in a good way. And these people are used to just coming in and doing active investments. It's how the space started. In the beginning, you only had Bitcoin. So it was the only way you could invest in crypto. You had to go and buy one token, one asset. And as the space evolves, similar to how it happened in traditional finance, what's happening is that projects and entrepreneurs are starting to find ways to make it easier for people to come in and just give exposure to a wider set of tokens instead of just one. This is what we saw happening in the story of indices in traditional finance, and we expect the same to happen at a much faster rate in crypto. So that's basically the reasoning behind it. It's just that we're really early in the sector, in the space. It's just the beginning, the tip of the iceberg. And as we grow, we expect indices to grow a lot as well.
Yeah, and this is how the stock market started also, was stocks. They didn't used to be ETFs and index funds in the stock market, but just over time, as the market developed, they found, hey, this is more secure to invest in the market as a whole rather than trying to pick the winners. So that kind of leads me to my next question. And we have a lot of questions from the audience. So audience, keep asking. And once I get through kind of what I want to talk about, because it's my channel, to be honest. But then we'll start bringing it up.
James, can I add on to something that Carol said there? Is that okay?
Yes, please do.
Brilliant. So like, one of the things that in my mind helped me understand the importance of indexes, because for people that don't really know about indexes, it's tough to like understand like why you should care. And one of the things that really got to me is that, if you have money in a checking account, savings account, wherever you might have it, you have exposure to indexes, whether you know about it or not. And if you look at the global equity market, which is worth around $95 trillion, 18% of that value is held in passive index funds. And that's a huge statistic. And to give that some comparison to crypto, if you look at, let's say, DeFi, I think 0.6% of the entire DeFi TVL is held in an index fund. So that shows you kind of like how early it is. And as you point out, James, like I think in the 70s, indexes kind of became a thing. And at that time, they were kind of gone against by society as a whole. They were seen anti-American. They were bad for capitalism. They're bad for the markets. What we then saw is that people couldn't outperform them. So everybody now, if you go to a financial advisor and you say, "Hey, I want to invest in the equity market," what do they say? Buy an index. Warren Buffett, if you listen to like the advice he gives to people, he says buy an index. So it's amazing that we haven't seen that yet in crypto, and that's something that we're looking to change here in future.
Yeah, and you know where Warren Buffett is from? Omaha, Nebraska, which is where I'm from, Lincoln, Nebraska. So I have my Warren Buffett plush toy right there in the bag. You can see him. So yeah, you're always welcome to quote Warren Buffett. Yeah, no, that's a great point. And you kind of already mentioned these and talked through some of these reasons, but why would an investor who's currently doing more active investments, why would it might be wise for them to move everything over to index funds, or at least part of their portfolio into index funds? What are the advantages to an index fund?
Yeah, I mean, it's really tricky on the active trading side to have an ongoing strategy, a life, and then still have an edge in the market. It's really tough. So what we tend to see with smart money investors is having a percentage of their portfolio in an index fund. And what we're seeing kind of relating this to crypto was a lot of my friends are like this. They were focused on DeFi. Now they're looking at NFTs. And they're like, I just can't keep up with what's going on in the DeFi market and the DeFi space. What's going on with projects, what the latest community proposals are, what's going on, who's been hacked, who's raising money, whose TBL's working, I can't follow it all. So the idea that you can manage both and have an edge in both is crazy. The best thing to do is to buy an index. So save time, have good performance, own the best performing assets of the market, no matter what the market is doing or where it goes, and also being disciplined. I, as a person, and I don't know if you guys would admit to this, but I make mistakes. And especially when it comes to trading, I make lots of mistakes. I make emotionally driven mistakes. I make mistakes based off greed. I make all sorts of mistakes. And having an index and investing into a product like that removes those mistakes. You're disciplined, taking all the human, faults that we have away.
Yeah, it helps you stay disciplined as well, no matter what happens with the market. As Charles is talking about, a lot of the mistakes that people make are related to emotions and just human behavior, which is what makes us great, but it's also what can take a big toll in the performance of our investments. On top of that, there's also a strong benefit on gas fees. Like when you do active investing, you have the gas fee when you come in, when you come out, and when you're managing your portfolio, right? The prices change, tokens come in, new projects come in, some projects come out, and you need to keep managing that in an ongoing basis. When you purchase an index and you invest in a basket of assets like ours, you don't have all of that management and all the gas costs that you would have over the life cycle of your investment. You have just the first one as when you buy the token, and you even avoid gas fees of having to buy each token separately, which on Ethereum now, it's not a huge problem as it was a few months back, but it's still something that can take a toll on people and can create a barrier to entry, especially when we're talking to people that don't have that much disposable income to invest. Every gas fee, everything that they can improve in the efficiency is something that will come back into their pockets.
Yeah, and I've experienced that myself, the emotional, when you see a project that's in the green and the chart is going up, it's way easier emotionally to buy, even though that's the worst time to buy is after a 200% increase. And it's like, oh, I'm buying that one. And then when it's down, when everything's in the red, it's so hard to click that buy button, even though that's the time where you want to get in. And so, yeah, an index fund takes a lot of that psychology and emotional problems out of the equation, and just gives you the best mathematical chance for succeeding.
Exactly.
All right, very cool. How would you say that index funds and well, maybe let's first start. How do crypto index funds compare to stock index funds? Do you see them kind of performing? What differences do you see there? Do you see them kind of performing the same way, or is crypto so much more volatile? So do you see the index fund is so much more volatile, or what kind of are you seeing a comparison there?
So like, I think it's good to give a bit of like context and kind of a brief history to indexes in crypto. It's very short. So what we saw in traditional finance is, traditional structures where you would have like the operator of an index, and you would have market participants who buy and sell the index and hold it, and they'll rebalance quarterly or whatever. In crypto, what we saw to begin with was institutions, kind of smaller scale institutions, doing something similar. But to participate in that, you needed to be a high net worth investor. It was very closed off. You needed to have a certain amount of money that you're going to invest in the index. You needed to be approved. And it wasn't open for everyone. And one of the issues with that as well was they were trading off large centralized exchanges. So for new assets, or for assets that chose not to go onto centralized exchanges, they couldn't provide investors access to those. So that really wasn't a Web3 purpose-built index product, right? It was a traditional index trying to, attain the value of Web3. So then, Phuture comes along and looks to create an architecture that utilizes decentralized exchanges, follows a strict methodology. Our methodology includes looking for minimum liquidity on the individual assets. We have to make sure that the project's been operational for over a year, the token's been trading, they're on DeFi Llama's DeFi list in the case of PDI. So we have to set methodology. And once we see it approve the individual assets, that is our methodology list, they will then appear in the index. And that is then available for everyone to participate and buy that index. So like that is really another way of kind of thinking about an index. And it's a purpose-built Web3 index, as we like to say. Now that index can be adjustable for not only focusing on sectors. We're launching one on Avalanche with our partner Colony. And that's going to be an ecosystem index. So that's not looking at a sector, it's looking at the whole of Avalanche. And for people that want to get exposure to Avalanche, but don't quite know where to allocate the capital to, they can say, you know what, I believe in the ecosystem. I'm going to take a bet on that. And that's a really interesting way of allocating capital. So that's kind of, how a Web3 index works. In the case of PDI, we've done something not yet seen before. We've integrated with Yearn Finance, and we give PDI holders interest that is earned on the assets that they own in the DeFi index. This has not been done before. And it's interesting because if you look at a traditional index, as your kind of original question referred, they do this. Vanguard lends out the capital of the index and the assets of the index to hedge funds for long and short positions. But you don't benefit from that, right? You don't benefit from the money that they make in that. And that's kind of part of the game, is that they have the assets, they can make all this additional money, you have low fees, you're happy. In the case of PDI and hopefully many other Web3 indexes, they will do something similar, where you as the investor benefit from all the different revenue streams that are associated with these types of products.
Yeah.
Awesome. Yeah, go ahead, Carol.
I was going to say, Charles, that was exactly what I was going to add. Composability. I think that's something that is completely different in DeFi and Web3 compared to stock market. And just God knows what else we're going to be able to put into the architecture of the product in the future in 5-10 years. And I think this brings great opportunity for crypto index funds. But there's also something else. When we're looking at the stock market, you're looking at one type of asset, which are stocks. When you look at crypto index funds, they can be governance tokens, they can be NFTs, they can be gaming assets, they can be other things, and things are going to keep on being created. So it's just I think it brings a lot more opportunity just because there are different types of assets that we can play with, that we can build with. So if Charles was saying in the beginning that in traditional markets, index funds represent 18%, in crypto the potential is to go well above that, just because of these factors.
Awesome. Great answers. A lot of good stuff in there. And I want to welcome new people that are hopping on. Again, thank you for joining us. We're talking about index funds today and specifically future finance. Please hit the like button. And actually exciting today, I'm streaming this to YouTube, which is where most people are, but also streaming to Facebook, Twitter, LinkedIn, and Twitch now, streaming there also. So don't have much of a Twitch following, and most of them are expecting Call of Duty content, but I'm just going to start streaming there as well.
We're here to build the follower base.
Yeah, so that's right.
Already head to Twitch.
That's right. Well, I want to turn Twitch not just gaming, but I think Twitch has a lot more opportunity. So education, for sure. But go ahead, if you're in the comment, hashtag where you're watching from. So Twitter, Facebook, YouTube. I'm just curious, so I want to kind of see that. Charles and Carol, could you talk about how you feel like the index fund is performing through the bear market? And, do you feel like an index fund is kind of a hedge against bear market, or is it better in the bull market, or kind of how does the market condition affect what's going on there?
That's a good question. We had this discussion around a month ago. And, you never know what the market's going to do, right? And, we'd be lying if we say we knew what was going to happen tomorrow. But what we do have is data and on-chain data that is for, performance. And what we found for the month of July was that PDI, and this doesn't have any reflection for future performance, I'd like to clarify, but PDI outperformed Bitcoin, Ethereum, and a lot of other DeFi assets. I think we had around 78% increase for that month, and July on whole was a pretty bad month. So that's very interesting, and we were trying to figure out, well, how have we captured that value? And what it seems to be is by accumulating the blue chip assets, if you like, within PDI, we are buying good quality assets, and that means that when we rebalanced in June, because we rebalance every month, we just upped the amount of quality assets that we had. And it seems that when markets are down, people are buying more of the quality assets. A lot of people obviously are buying kind of other kind of crazed assets or ones that are slightly undervalued, and that's cool. But for us, we've been buying blue chip assets, and we've seen a lot of growth in that sector. So we're really interested to see the continued performance of that. We feel very strong within the constituent assets that we have. They have good liquidity. We trust and know these assets extremely well, and we're really excited to see what future performance is going to be. But we've been blown away with everything thus far.
Yeah. One thing that we like to say is that indices help you ride the trends and not the extremes. Of course, if you pick all the best assets in a given period, you would get the extreme, the peak, and just to get the top of the performance. But 10 times out of 10, people don't do that. People are not able to pick the best assets. So then you get some that went well, some that didn't go well. And in the vast majority of the cases, the people are trying to do that individually, they end up going on the lower side of the spectrum. And with indices, you ride the trend basically. And I think this works well both on bear markets and bull markets, especially with the composability we were talking about, with the partnership we have with Yearn. That boosted yield, that additional yield, helps to create a bit of a cushion, especially in bear markets. But when it's a bull market, that additional yield also comes on top of the price appreciation. So I would say there's no bad timing for an index really. It's good in both situations.
Okay, very cool. And then last question, then I'll start bringing up. We have a lot of audience questions, like 20 or so. So we'll see how many we can get to. But do you feel? Actually, I got two more questions. First off, do you feel that index funds will someday overtake the day trading and the active trading that we see so common? And do you think, because that's what we see kind of in stocks, right? Is there's way more index funds now. Do you kind of see that's where we're going in crypto?
Yeah, for sure. I think that, you mentioned a really good point earlier about like how early crypto is. And, one of the figures that we really like is that there's 105 million active crypto users. And I think that if you look at the internet, there's like 5.3 billion active internet users. So that statistic says two things. Like one is it's incredibly early. like really, really early, much earlier than people think. When I tell people that statistic, they said, really? Like, I thought there'd be way more. No, like the actual active user base is very small. And the other thing is, like, we actually have active users. There is a real need and use for daily transactions of value and interactions with the crypto economy. So it will absolutely overtake crypto. And I'll give you a prime example. If you have a family member, a friend that wants to get exposure to the space and comes to you, we all do, who says, what should I buy? And you say, well, start with Bitcoin, buy Ethereum. And they say, great, I've heard about this thing called DeFi, or another sector that's emerging. How do I buy that? And it becomes kind of a tricky question, because you're like, well, you need to have a MetaMask wallet, you need to have ETH on there, then you need to go to a decentralized exchange, so you can go to an aggregator, you need to buy these different assets. Okay, how do I do that? Well, you need to do this, and it kind of loses them, right? So I don't foresee that really changing that much as the dynamics for how to purchase and buy these assets. What I see changing is the ability and the ease to get access to those assets. And that's something that we work on. So for that uncle, that friend, whoever it may be, who wants to get exposure to, let's say, DeFi, or let's say the metaverse sector, how do I do it? Well, buy this index. It's going to essentially track the market for you, give you exposure to the real assets, not the synthetic ones, the real assets, and you have complete ownership of those assets. And at any time you can redeem for the dollar value or the constituent assets. That's your choice. Or you can just sell for, the dollar value as well. I think that's going to be a lot easier to get more people into the space, A, and B, for people who want to get exposure, who don't want to mess around with like 10 different tokens at the same time, right? So I think that's one of the main reasons why, indexes or passive products will outperform active.
Okay. Yeah, no, and I totally agree. And you already pretty much answered this, but just want to get maybe a couple more thoughts on, so how do you see index funds helping get new people into crypto? Again, that's my passion. And that's what we need in the crypto space. Is we've seen the total market cap go from 3 trillion to 1 trillion. And none of these projects are going to work unless we get fresh capital coming in. So how do you see index funds kind of playing into that? Did you have plans for like a fiat on ramp and those types of things? Because I think like you were talking about the difficulty of buying, getting into a wallet, those types of things. What are your thoughts on that?
Absolutely. So, indexes are key to getting new peoples and persons on board. It's just going to be really tricky. If it's the current structure, you're essentially rewarding opportunists or people who are going to lose money. I mean, how many mistakes have you made, James? I know I've made a lot, from buying tokens that weren't really a token that I thought it was, for getting rugged in the liquidity pool, for not checking the liquidity. There are so many mistakes, and you're gonna scare so many people away when you bring them in and you introduce them to this whole world. And it's not very straightforward. What we have to do is create simple products that give people simple exposure. That is what an index does. So it's our job at Phuture. It's not to sell Phuture. It's not to sell our indexes. It's to sell the space and the opportunity the space represents, and as to how you can get exposure. That's how we see it. So when we talk about PDI, our DeFi index, we don't talk about PDI. We talk about why you should invest in DeFi, why you should invest in the asset sector that I think in 2020 had 260,000 wallets that had control or ownership over a DeFi token, to now I think it's like 4.6 million. In 2 years, you've seen that growth cycle. Incredible. This is one of the reasons that we're so interested in creating these products, because we see the real need for people to get exposure.
Okay.
Yeah.
Very cool. Yeah, I don't know what you're doing wrong. I've never been rug pulled or had my, coins not work out. You must be doing something wrong with your trading.
I must be. That's why I buy an index.
Yeah, that's right. That's why you're for the index. No, I'm just kidding. That's happened to me a lot.
Can I add to this as well, James?
Yeah.
I think Charles gave a great explanation. Something else that I can add is that right now, the way that crypto is set up and the risk and the volatility, inherently, it excludes a lot of people. It excludes a huge part of the population, because not everyone is in a position in their lives that they can take that much risk, basically. And if we can create products that help people get that exposure, but not have to take the entire risk or the entire volatility themselves, this naturally is going to include this sector, this segment of people that are right now excluded from investing in the space. And I think indices are one solution to that. So that would be my addition.
We will be adding fiat as well. Like that's really important. And we're trying to trial out like a DCA model where people can contribute, let's say here in the UK, £8 a month, right? Something like that. I think that would be pretty cool. But anyway,
that would be awesome. I think that'd be a game changer for sure. Okay, I want to get to some of these audience questions. Audience, keep them coming. Sorry I haven't brought them up yet, but wanted to get through my stuff first. Selfishness, what effect will the upcoming fork of Ethereum move into point of stake? Do you see that having any effect on what you guys are doing?
Yeah, for sure. I think that it doesn't really refer to like what we're doing. It refers more to the projects that we give exposure to via our products. And that's a really good question. How will the transition affect projects? Will it affect the core functionality of large projects like AV or Uniswap? You'd like to think that people have already thought about this and baked it through, but I do foresee a bit of volatility taking place there. And I think for people who are already in the space, it's probably going to be a really good opportunity to get more exposure to assets that you like. I think there's going to be a lot of uncertainty around that. From our standpoint, we're ready to transition over. We'll make sure everything is safe, and we're really looking forward to a faster, more secure ecosystem, and using proof of stake mechanisms as well for the first time on Ethereum.
Okay, yeah, good answer. And actually, that made me think of one other benefit to an index that we didn't really talk about. But so I'm in like 70 different projects, and all the time news comes out about these projects that I miss because I'm in too many. And then I didn't know, I was supposed to move my tokens from V1 to V2, or I was supposed to unstake and restake or whatever. And if you're in an index fund, you wouldn't have to worry about that. That's where you guys will be taking care of all that. You're going to be following the news. Should we sell? There's a new exchange that came out. We should be selling Uniswap and picking up this or whatever. So you take a lot of that legwork off and put it on you guys. So
we do all that legwork. The great thing about Phuture and the way it's set up is, I don't do that. Carol doesn't do that. The team don't do that. We have a decentralized operating system whereby we have a network of keepers who essentially do the rebalancing. So everything's set on chain. There is no kind of person or magic man that like behind the scenes does this. So it's fantastic. And you're absolutely right. It does it. It looks after itself.
Yeah. Awesome. Then Funny Turo wanted to know, will the different assets in the basket be held in each user's wallet or in Phuture's wallet, and we're given a token receipt of that basket?
Yeah. So what, in the case of PDI, is one PDI equates to your breakdown of the constituent index assets. So let's say if you hold one PDI, you're going to have, let's say, I don't know, $10 of Uni, $10 of Lido, $10 of, what are the other assets are within the index at that time. And at any given point, you can redeem for the underlying assets because that's your share, or the dollar value of those assets at that time. Does that make sense? And what we'll be doing with those assets is we'll be using a part of those to put onto Yearn to optimize for yield, but we won't be putting all the assets on there because that would put us in a situation that we want to get away from. And we hold a lot of those assets in safe storage. So at any given time, you can redeem.
Okay. Yep. Nope. That makes sense. And then who makes the decision what assets are put or removed into the basket, the fund?
Yeah, so we follow a strict methodology. There's no person that sits there and depicts what should or shouldn't be. There's no bias. The methodology includes essentially having a listing on DeFi Llama. That's really important. The product's token should be listed on CoinGecko with pricing data for at least 1 year prior to the inclusion of the index. So the token needs to be up and running. The token needs to have, data. It can't just come out of nowhere and then automatically be added to the index. We need to know how this operates. We need to make sure it's safe for the users of the index, especially if we invest large amounts of money into the project as well. The project should have a token list that is native to Ethereum, L1 or L2. So that basically excludes wrapped variants. So let's say there's a really big asset on, Near or Avalanche that then has a wrapped version of Ethereum. We can't include that in the case of PDI. No rebasing or deflationary tokens. That's really important because we could have a situation where the supply inflates, and then how do we then break that down into the users and making sure that their stakes of that are constantly in flux with what the true value is of that token. We have to see actual utility of the project behind the token as well. And we have to make sure there's no synthetic variants of that token, right? So we're not looking to own a synthetic, we're looking to own the real asset that is the token itself. And we have to make sure that the project has no ability to pause or transfer the tokens. That's really important with an index. We would hate to have an index that allows for that to take place. And then all of a sudden somebody pauses, the tokens that are out there, that would cause massive issues. So we have to make sure our users are protected at all times.
Yeah, and
Okay, go
Mahamud,
ahead.
the person that asked the question, everything that Charles is saying, it's written down, transparent in our docs pages. So all the criteria he just went over. So this is very transparent and something that you know ahead of time, and it's not something that we're going to change, that we have the power to change. But by no means, that's the strategy that we set when we create the index and when you invest in it, and it's going to be like that forever. So you don't, that's the beauty of investing in DeFi. You know what you're getting through smart contracts.
No surprises.
Yep.
Okay, very cool. And then we assume you have to make some money off of this in some way. So are there management fees? Again, that's how traditional, index funds work, and we know that. Do you want to talk about that a little bit?
Yeah, sure. So, people get kind of two things confused. There's a performance fee and there's a management fee. In the case of Phuture, there's no performance fee. The upside is all yours. We don't touch that. We take a small fee of 1% for the management of that index. But when you look at, let's say, the yield that you're going to be generating, it'd be very unlikely that you'd actually feel any fees with the product itself, which is great. And one of the reasons that we added the yield aggregation effects. I think that, one of the important things to really understand is it's really tricky to pick what's going to work and what's not going to work. And I think that by investing into an index where the market is at the minute, as you mentioned, James, it's down. And with what's to come, with educators like you in the space and more people, as we get to billions of active crypto users, it's not hard to believe that the space is going to grow multiples of where it is today. So if you believe that it's going to grow, if you believe that it's going to, continue the growth trajectory that it's on, buying an index representing a sector is a really smart move, in my opinion.
Yeah, not financial advice, but
not financial advice.
Yeah, financial nudging is what I call it on my channel for legal reasons. How often will the rebalancing take place? Is that done weekly, monthly, quarterly, or how's that?
That's done every month. We have a date that takes place, and essentially what will happen is we will run a script. We will see, following the methodology, what new assets should be added or should be taken away. We will then put the job out on Keeper networks. So that means that any Keeper operator can poke our smart contract. They obviously don't have any control over the trading side of it, but they'll make sure that the system rebalances. And then at the minute, because Ethereum is a little bit slow, I think it's like 15 TPS, it might take a couple of hours, but then all the system will be rebalanced, and then we'll be announcing the new assets as well. So it'll be monthly.
Okay. And then do you have a kind of insurance on the funds?
Good question. So a lot of the funds that are in the index at the minute have insurance. So I don't think it's far-fetched for us to put that out there. What we haven't yet done is got insurance for PDI itself. But given that all the assets already have insurance, or the majority do, via DeFi insurance lenders and providers, you can rest assured that the assets are safe. But the other thing we do with the methodology, we have to make sure the project's been up and running for a year. And that's to make sure it is safe and secure for you. That's to make sure that the smart contracts do work. There's no surprises there. They have to be battle tested. Yeah.
So the insurance is actually a robust methodology. It's not the same. It's not a product, of course, but this is what we do to safeguard the funds of our investors. We have a pretty solid, transparent, and robust methodology from the get-go.
Okay. And then, so Extreme Crypto has a question here, and I'm thinking through what exactly he's asking. But what makes this different from using a rebalancing bot? So have you seen kind of bots that do a similar thing? I'm trying to think. Most bots I have, I mean, you could kind of buy Bitcoin, and that's kind of an index fund in and of itself, sort of. But I don't know. Do you have any have you seen bots that can do something similar to this or anything like that?
I mean, like a bot is to essentially perform an action, and what we've seen with the rebalancing is that there are people referred to as keepers that will essentially take the action of rebalancing and prodding the smart contract. Could we enable bots to do that? I'm sure we could, but what is the net gain? They still have to pay for the gas to do that. I'm not quite sure what the benefit would be there. And the cool thing about using Keeper is that anybody in the world can be a keeper. So it kind of opens out the ability and removes friction from us creating a bot, which could be faulty of some degree. So we like to kind of make sure our stuff is open and everybody can see it.
Okay, good answer. And then will there be, I don't think there are right now, but will there be different risk tier baskets to choose from?
Good question. I think it would depend on what you define as risk, and the asset pool or asset sector you define as risk. Some people would consider crypto as a whole risky, right? We definitely have with our new product coming out, Kai, which is an Avalanche index. I guess you could consider that a little bit more risky, given Avalanche is less tested than Ethereum. If it works and the ecosystem, performs the way we expect it to, that would have a huge upside. So, it depends your level of risk, but we definitely want to have more exposure to kind of earlier stage sectors for investors. We have to make sure we can provide the correct exposure for the demand.
Okay, yes. And then here's a good question. We didn't really talk about it. So if somebody watches this and they're like, hey, I want to buy an index, is it easy for a crypto novice? What do they need to do to get an index purchased?
It's very easy. If you head to future.finance, our website, you go into the application. You can either buy through Bancor with your ETH or USDC or whatever crypto you have, or you can just buy it through our platform. It's very easy to get exposure. It's a good question.
Yeah, we even put together a tutorial on YouTube, just showing people where they click, how they do it. So it's pretty easy.
Yep.
Yeah, very cool. And then very easy to use website. So nice looking website, especially compared to a lot of the dApps in the space. So very nice.
Well, as an educator, you can appreciate our focus towards the mass audience and trying to kind of stay away from generic crypto complexities and try to keep it easy for people.
Okay, and we talked about this, but just to kind of clarify, just so it's clear in everybody's mind, what is the role of the PHTR token? How does that fit into what we've been talking about?
Good question. So us at Phuture, we have our own native governance token. We actually conducted an IDO, I think like last year, which was, I believe, the second fastest IDO in Polkastarter history, which is a big launch pad. And that is a really important kind of key asset. Now, PHTR is not going to be in the indexes. That would be wrong. That would be kind of, against the whole methodology purpose. But by owning PHTR, you're going to have a claim on future profits from the indexes at some later stage. But you also have decision over governance. So, James, you have to imagine that with the indexes that we have, we're going to have, I think for Kai, we already have over $2 million in value committed to that product, which is a fair amount so far for the space. But that gives us a lot of say in governance votes for the underlying assets. So we can vote on what this project is going to do or not do. And PHTR will be the form and mechanism that we will be able to understand what the community believes the vote should or shouldn't be. So it has a really important governance purpose early on, and then later on we'll have a revenue alignment with our products. So it's a very smart way to get exposure to the space as a whole instead of just one index and one ecosystem.
Yeah.
Okay. Then you talked about the AVAX chain. Other chains in the future, BNB, other chains?
Yeah, for sure. We have a multi-chain approach. We launched on Ethereum because we always said we were. We're now on Avalanche. We've got the Kai index backed by Colony and Ava Labs, actually, which is fantastic. We're talking to many other ecosystems. One of the challenges with the newer ecosystems, though, is that we would love to build sector indexes, that really focus on one sector. But because the sectors haven't really emerged yet, it's kind of like a bit of everywhere. So we create ecosystem indexes, and we have a lot of big announcements coming out in the next couple of weeks on that. So make sure to stay tuned to our Twitter page and website. But yes, lots of different indexes and lots of different places.
Okay. And then do you want to talk about how things have performed so far? When did you kind of launch this and how it's done so far? I know the markets have been rough. So do you want to talk through that a little bit?
Yeah, sure. I believe we launched in June. Is that right, Carol?
I think it was a little before that. I think it was May.
May. Okay.
Yeah.
Wow. What time flies. So what we've seen performance-wise, really month on month is very interesting. I mean, as I said, for the month of July, we had our best month. I think we performed 78%. You can check this information out because it's on-chain data. Zerion, our partner, has this information to hand. The months before that, I believe, were very kind of stagnant in line with the market. But what we saw was when there is volatility, when there's people trading, buying, selling, whatever it may be, the index performed incredibly well. Obviously, when the market's stagnant, there's not much to really be said. But in times of volatility, we've seen the index perform incredibly well. I mean, it's a great question. I mean, the more data that we have, the more we can kind of share with that. But if you go to Zerion, which is one of our partners, you can check out all the information for PDI thus far, all the on-chain data. You can compare and contrast to other assets as well. So definitely check that out.
Okay, good answer. Very good. Hey, we're flying through these questions. This is awesome. And thank you, audience. I'm going to just remind you once again, please hit like if you have questions that you want to ask either about the project or just about crypto market in general. This team has a lot of experience and a lot of knowledge that they can bring. Let's see. Yeah, we already talked about that. What is your monthly rebalancing methodology? Do you want to talk a little bit about the methodology of maybe as a whole, how you're deciding what goes in there? You did a little bit before, but then how the rebalancing works?
Yeah, sure. So what happens with the rebalancing is every month we run a script, and that script will be looking at the methodology. It'll be looking at the assets that should be removed, if any, and the assets that should be added to that index. And that follows the methodology. And you can read about it, but I can give you a high level overview. So we need the project's protocol product to have significant usage. We need to make sure that there's no pause or token transfers. We need to make sure there's no synthetic tokens that value kind of take away from the token that we have in the index. We need to make sure there's no rebasing or deflationary tokens. We need to make sure that there is a dedicated team actively building, supporting, maintaining the project. We have to make sure that there's no wrapped variance. We have to make sure that the project's listed on CoinGecko and CoinMarketCap with at least 1 year's data to back the project up. And then what happens is we go to Keeper Network. There is the huge network of decentralized keepers all around the world. And we put out the assets that we need to have in, and then they will essentially prod the contract. And it will take, sometimes a couple of hours, sometimes longer. It depends how congested the network is to fully rebalance. And as Carol mentioned before, if you want more information and a kind of a detailed breakdown, you should head to docs.future.finance, and we show everything there. Everything is on chain as well, so it's never a human decision. It's always on chain, and that's a really important thing for us.
Yeah, and we also send out an email to everyone in our subscriber base, just giving the rundown of the month, the performance, and what's happening, the rebalancing, what were the changes in the tokens, the weights, and if anything else that might be relevant. So if you're interested, and it seems like a lot of people are asking about rebalancing, that might be also a good way to check it out. If you go to the website, as Charles was saying, just scroll down to the footer at the bottom of each page, and you can sign up there.
Okay. Yep. And I put that link in the comments. So yeah, go check out the docs for sure. Do you want to talk about, you've mentioned it a couple times, but we haven't really specifically talked about it. Do you want to talk about the advantages to this being kind of all decentralized and on the chain, and it's all done automatically, not by a human? Do you want to talk a little bit more about what advantages you see from that compared to a human in there doing it all the time?
Yeah, absolutely. I mean, when you have humans involved with stuff, there is open for bias. And theoretically, if you have an index fund, and there's not that much regulation in crypto. So somebody could theoretically come along and say, hey, I've got this token. I'd love you to add it to the index. I'll pay you X. All of a sudden, you now have exposure to this token or this asset. Like that can happen if you don't have the structure that we've created and built for Future. There are many other benefits as well. Like, let's say if the team get wiped out, tragically for whatever reason, the rebalancing is not going to take place. We've set permissions and structures so that you don't have to trust us. You don't have to trust me, Charles, or Carol, or the team. You don't have to know us. It doesn't matter. You can trust that it's all on chain. You can trust that you can't trust us. And that's important when you're looking at, large capital deployment coming into these assets. The more trust that you have to have in us, the less trust you should have. Because who are we? We're merely creators and catalysts of the launch of Future. And we're here to help run the network, but we don't make the decisions. Once the methodology is set, you can trust that it's going to stay set that way. And that's really important for us. So I think they're kind of the human level ones. Performance wise, once again, you're opening yourself up to a world of biases, mistakes, trading errors, whatever it may be. That's an issue. I mean, we've spent hundreds of thousands of dollars on code audits to make sure that everything we have out there is as safe as possible. Those audits, I believe, are publicly available if people want to see and look at those. So these are things that are important to us, and to make sure that people can trust our indexes and the protocol itself.
Yeah. And there's a lot of things that humans can do better than machines, but there's a lot of things machines are better at. Like we've had, since airplanes have switched to autopilot, we've cut down 90% of the number of accidents, and so there's some things that machines will just be better. You can program it, do this, and it'll do it without the emotion and human error involved.
Exactly. And I think in crypto terms, you look at like what's happened with Celsius, right? Where you had trust. We trusted that Celsius wasn't going to run off of our money or make foolish mistakes or do silly things. And that trust was broken. They did that. And, that is really a shame because it hurts the space. And with a system like Phuture, you don't have to trust us. You don't have to say, oh, I believe those guys are good guys and they're going to look after and do a good job. You don't have to think that. In fact, we implore you to not think that. We implore you to look at the smart contracts or to look at the methodology. That doesn't change. We don't have access to your assets. We can't make, on-the-demand decisions, based off our situation and what we're up to, or an idea that we've had to make even more money. And I think that the more people become aware of that, the better it is for the space as well, and kind of move away from these trusted leaders who can hurt us.
Yeah. And just to emphasize that, so I have a unwritten rule that I will not use leveraged trading because I've got liquidated once, and I'm like, I'm just not going to do that. But in Nexo, my assets in there, I was like, oh, AVAX is pretty secure. This was back when AVAX was at $100 or something like that, and I was like, you know what, I can set my liquidation price at $40. There's no way AVAX is going from 100 to 40. I'll be totally safe. I'll break my rule this one time, and then lo and behold, AVAX down to 14, 13, got totally liquidated. And it would have been better if I could have programmed in, hey, can't use leverage at any time. That would have been better. But my human error, my greed got in there and ended up losing. I lost quite a bit of money in that liquidation there. So that just emphasizes kind of the power of not having that happen, doing it that way.
It's very true. I'm sorry to hear about that. We all have our stories.
Yeah, they're always lessons, as long as you learn something from it, which is true. I'm not going to use collateral,
we can share those. We can admit it, you know what I mean? Yeah. And that's the important part. And we're not always right. That's tough to admit for a lot of people.
Yes, absolutely. We already talked about this, but any support for auto deposits coming? Is that on the roadmap? And how far out do you think something like that would be?
Yeah, we'd love to. We are in talks with a few different on and off ramp providers. We'd love to build that feature in. It would be something that would have to get fully audited, obviously. But I think dollar cost averaging into an index is very smart. And also, what a great way to do it. If you can set up a direct debit from your account every month, X, or every week, or every day, X goes in. What a great way to get exposed to crypto. And as Carol mentioned, not everybody has the money lying around to just deploy instantly. And it's a smart way to kind of have a little bite every month and get into the game.
Yeah, and it's actually a smarter way to get in because if you put all your money in at once, you might be hitting it right at the top. And then you might lose. And the dollar cost averaging method is actually probably a better way to get in. And I love things that I just have been DCAing into for a long time. I don't even check it, don't think about it. Then I'll get on and be like, oh, I have $40,000 worth of that from just putting in $1,000 a month for the last, 3 years. And so, yeah, a lot of power in that. All right.
You can't time it, it's impossible.
All right. Okay. I think last question here, and then we'll kind of start to wrap things up. We're approaching an hour, so this has been great. Super exciting for what you guys have going on. How many tokens will exist? And I believe they're talking about your native token. Is there going to be a limit to how many those are? And I think they're wanting to know more about the tokenomics of that token.
Of PHTR?
I think so.
Okay, well, there'll only be one, and that's PHDR. So that is the governance token of Phuture. For each index, only one token will be created to represent the assets within the index. Kind of one question that I can maybe kind of jump to from this is, how many assets can be in an index? And that's a question we actually get a lot. There is no limit to how many assets can be in an index. I believe in the month of June or July, there was like 5 or 6 assets in the index. Now there's 10. And there's no limit to how many more can be in. We want more assets in the index. It has to fit our methodology. As the space grows, as more money comes in, as projects grow, so will the index. It's not just set at like 6 assets, right? It's set on the best performing projects that fit the methodology. So in that sense, we're looking to encompass as many great quality projects as possible.
Okay. And then has your smart contract been audited? Is the question from Mohammed.
We've had multiple audits. We had a full audit done by Certic. We've had a public audit done, which was a public bounty. So that basically opened up our code base before launch and had a bounty for anybody that found any fault or issue with the smart contracts. So we did that with C4, and you can see the results if you go to the C4 website, or I think we have something linked in our docs. And then since then, we've done other audits with folks like PeckShield on different aspects. So we're very security conscious. And once again, it comes down to our belief that you shouldn't have to trust us. You shouldn't have to kind of take a guess that we're good guys and we know what we're doing.
Okay, very, very cool. That's all the questions we have from the audience. So thank you, audience. I think it was 20 questions, so that was great. Before we wrap up here, do you have any final thoughts that you want to share with potential investors or people who are not in the crypto space who are watching and they're thinking, should I get into any inspirational words to close us up with?
Absolutely. I think I'll refer back to the statistic that we mentioned earlier, which is there is 105 million active crypto traders or crypto participants in the world, and the internet is 5.3 billion. So that means that it's really early, and nobody has a crystal ball. There's going to be many projects that are going to come, many projects that are going to go. It's really tricky to figure out what is here to stay and what's not. What's hype and what's not. And one of the smartest ways, if you're on the fence or you're looking for exposure or not sure what to buy, but you want to buy something, buy the index. Do yourself a favor. You're not going to be that good at trading. I'm not. Nobody is. He's been in the space. Buy a basket of assets. Get exposure the right way. Learn about the assets in the index. The assets that we pick are the best quality assets. So learn about them. Do your research. Get familiar with them. Buy the index, see how it performs, see how it does. Don't invest all your money. Just try it out. See if it's for you. And read up. We publish a lot of content. So if you go to our website, future.finance, we've published a whole education system. And that includes what is dollar cost averaging, what is Ethereum, what is DeFi. Look at all the content we put out there. Learn. Ask questions. Come join our Discord. Be a part of the community. We're here to help you and your journey of getting more exposure. And when you're ready, buy an index. There's no harm done. You have instant liquidity anytime you like.
Okay, very cool. And then Mohammed has one last question. So that would have been a good place to just end it right there. You had such a good ending quote. But we'll ask this: is there a lockup period, or we can sell at any time?
You can sell at any time. There's no lockup periods of any of our products.
Okay, very cool. And then one last plug from me is you should consider. I would love if there was a Constellation DAG, that ecosystem and that network. If there was an index fund for that ecosystem, I would buy all of it. I'd put in $100,000 into that one. So consider for the future. That's my suggestion out there that I'll put.
What product is that? Sorry, James.
The Constellation DAG chain and ecosystem and their products. It's my favorite right now.
Listen, we can definitely look at that for sure. We'd be happy to provide you the exposure there. We foresee a world where indexes not just represent sectors, but represent communities as well. So we're really excited about all the things that we can be building out and growing.
Yep, there's a lot of potential for directions this could go. So.
Yeah.
Absolutely.
Awesome. Well, hey. Yeah, go ahead, Carol.
No, I was gonna add my final thoughts, final comments here.
Oh yeah.
About investing and looking into passive income in terms of timing, like just the concept of time when it comes to your finances and investments, the best time to invest is already in the past because of compounding effects. So you can just say it was yesterday, but not yesterday literally, but just the fact that it was in the past. And the second best time for you to invest is today. So don't postpone. Don't keep waiting for whatever alignment of the stars to happen. Start small, as Charles was saying. Investing is also a learning process. You need to get your brain, but also your emotions used to the numbers. So start small and start today. Start in the present time. Don't wait for something magical to happen.
And just to kind of thank you, James, for all the work that you do, you know, bringing more attention to the space. You know, we need more educators out there. We need more people trying to kind of demystify what is going on, how to get involved, and also like how to gain financial freedom in many respects. You know, that's really important. So we implore you and everything that you do and anything that we can do to help with the mission and the journey, you know, we're here.
Awesome. No, I appreciate that. Yeah. And Carol, just to echo what you said, so I learned the most about crypto and wanted to start investing when we were at market tops, and that was not the best time to get in. So actually now we're down is the best time to like get into crypto, to learn about it, because when we hit that bull run, you all kind of want to already have your some positions in. So you don't want to be waiting until it's up here and then, okay, I'll get in now. That's what a lot of people do. And unfortunately, that's why we have so many stories of people losing in crypto. All the stories of people making a lot of money in crypto was them buying at times like now. So just want to echo what you said, where it's not something that you want to just keep putting off. I'll wait till the markets are up. That's a bad idea. So
absolutely.
Awesome. Well, hey, we'll go ahead and wrap up there. Audience, I want to thank you guys. Again, we can only do these AMAs and things like that if you guys are here to watch again. So appreciate you guys so much. Please hit like on your way out, whether you're watching this live or recording. Hit the like, and then let's do hashtag thanks Phuture for coming on today. And then Phuture team, thank you guys for joining us. Thanks for sharing your project. And thanks for sharing your wisdom and your knowledge of the market. So really appreciate it.
Well, thank you for the time, the opportunity to talk about our favorite subject, crypto, and how to get exposure. And hopefully, you know, people have learned something today. You know, that's what we're all about.
Awesome. Thank you so much,
James.
Yeah, thank you so much. And yeah, reach out if you need help with anything else, want to come back on, need some retweets or whatever, just let me know and happy to help you out.
Thank you, sir.
Absolutely.
Have a great day.
All right.
Thank you.